Hi there, welcome to the closing bell on the 5th of March. And boy, there's so much going on at the moment. Markets are flying all over the place, and the news of Russians bombing the biggest nuclear power plant in Europe, which I'm sure hasn't devolved into a nuclear explosion, but nonetheless, that's not the sort of news headlines I'm used to reading. And it certainly caused a lot of selling pressure on the Friday. It's currently about 1 o'clock on Friday afternoon, so I'm in the middle of that unfolding. Not sure how the market's going to close, but I guess that's the point I want to make today. Is we're in this, middle of this geopolitical problem. We're a couple of weeks out from the Fed possibly raising rates. We've got inflation running away from us. We've got nuclear power plants on fire. I mean, this is not for the faint-hearted, being involved in this market. And I have been warning you for quite a while that I thought markets were going to sell off. So hopefully you feel on top of things and you're not feeling overly exposed to what's going on. But it's just the type of market where the news flow is so dramatic that things can actually reverse very quickly as well. So you're seeing lots of volatility, and we're seeing oil prices, flying through 110, 120 bucks a barrel. But then if Russia pulls out tomorrow, that could reverse just as quickly. So you have to be very wary of just jumping on the bandwagon on what's going on. You either have positions. I mean, I have been telling you about buying Beach Energy, for example, a while ago, Woodside Petroleum. I've been telling you about the oil and gas situation, and that oil prices were probably heading above $100 for quite a while. So you're either in positions and reaping the benefits, but be wary of just jumping on bandwagons at the moment, because it's just such a volatile period based on geopolitical events. And in the past, I've seen these things cause massive volatility for a little while. And then in the longer term, not much really changed because the situation sorts itself out. Markets reverse back to where they were. And all of a sudden, people who were just chasing the bandwagon are the ones that get hurt. So let's just have a look at a few charts, though, just to give you a sense of just how wild the markets have been on the back of this Ukraine situation. So here, let's start with the S&P 500. And I want to show you a very long-term chart on that, just to give you a sense of why I've been really backing off, I guess, taking profits for a while. And I'm not really ready to start buying lots of stuff yet. The major thing I want you to focus on, this is a 20-week, this is a weekly chart. And I wanted to show you the weekly chart to give you a sense of the 20-week simple moving average, and that's the blue line. So I want to give you the sense of when that blue line is rolling over, when it's turning, sorry about that, when the slope of it is turning down. And when we've had these moments of the slope turning down, that's the time when you've just got to be wary. And I just want you to note that right now, we are in that phase where prices are selling off. The 10-week exponential is below the 20-week simple. So the weekly charts are down. And, so many times in the past, it can be just a short, sharp sell-off. And then, for sure, we then go on to the next wave higher. In the last few years, we had a big sell-off there, but you want to note how big those sell-offs can be before things turn up. I mean, this is a crash in 2020, and you got some good prior warning once that 20-week moving average was really starting to turn down. It's like, well, you want to be wary, and that's the state we're in. We're just in a state where things are selling off. We don't know how far they're going to sell off. It could end up being a great buying opportunity, but it's just a state of the market where the momentum, if we break lower, can really get a bit out of control. So that's why when I'm looking at the S&P, and you'll remember a while ago, if you go back and do watch my videos, you'll see that I was saying once we got that momentum shift down, so we had the big sell-off, and I was saying, usually you get a mean reversion back to those moving averages, that 20-week moving average, the blue line there. And if the momentum turns back down from there, that's when you've got to watch out, because then you're starting to look like we're really turning down. It's starting to look like a downtrend now, isn't it? So there's just this chance of things looking like this. And it's been the first time for quite a while where we're in this situation where momentum really has started to turn back down. And we've got, so much on the horizon. Inflation at 7.5%. And all of, the prices going through the roof on commodities, soft commodities and hard, which is really going to create an inflationary impulse in itself, which really you wouldn't want the Fed raising rates on the back of that because of this Ukraine situation. But it is just going to add a bit of fuel to the fire with inflation numbers. It's certainly not going to make them come off anytime soon. And the Fed does need to chase inflation down, whether they like it or not. So there is just so much on the horizon, and the charts are starting to look a little iffy. It's been very early in the move, for this last few months. And, I've been talking to you at the end of last year and sort of saying I was getting a bit bearish and showing you the ASX and how that looked. And, maybe you were scratching your head wondering what I was seeing. But now I think it is starting to, take shape where you are starting to see this thing roll over. But look, it can take many forms, these sell-offs. It never goes or rarely goes in a straight line. So the way this evolves, you want to be wary when it's breaking below lows, because you often get those false breaks. It's pretty rare that you do get the break and then it just keeps selling off. But one of these instances, we will see something like that. But that sort of really big capitulation is often the time when you're then stepping up and starting to buy things. That's when it can be the beginning of that leg back to the upside. But it's just a state of the market where even if it goes into a bit of a sideways motion, let's say, the overall momentum really is down, and you want to be using strength at the moment, I think, to lighten up if you're in tech stocks and that sort of thing. We're seeing a lot of heat come out in that smaller mid-cap space. I've seen people like Regal Funds Management. Whenever I'm checking stocks that are really getting pounded, often their name comes up as a substantial shareholder that's dumping stocks. So it feels like people are lightening the load. There's a lot of heat coming out of the very overpriced stocks, and there's going to be great opportunities there in the smaller mid-cap space when you see the dust settle, because people end up selling the good stocks as well as the bad. So you want to be doing the work on, what are the good stocks that the market's now selling that you want to then start picking up as the panic really starts to pick up. But the commodity space is the one that's been so interesting this week. And, all I have to do is show you this oil price. And we have been looking at this. I'll start with a long term on this one, because I have shown you these charts before where I've been showing you the massive wave higher from 2000 to 2008 in oil. So this is US oil, so WTI. And we've got that huge wave to the upside. And I was showing you in the past, the buy zone of that wave and the sell zone of the wave. And have been saying to you, once prices sort of bust up through the point of control on oil, and you can see that midpoint coming in there around $80, and got rejected from there in 2018, had the big sell-off, and now it's turned back up, and this rally's been gathering steam. And once it sort of broke out above that high, I was like, look, there's not much resistance until we get up into the sell zone. And, prices have, on the back of this Ukraine crisis, just spiked in a straight line right up into that sell zone. So there's the bottom of the sell zone there, up around $110, and prices are coming back off. So it has reached that target for me, oil, in the short term, being up into that sell zone. Look, it may have an initial sell-off from there and end up getting up in there again. But I think it probably will struggle to get up through 110 to 130, depending on how the the Russia-Ukraine situation pans out. If they have talks and the Russians decide to get out, or the Ukraine decides to lay down their arms or whatever, maybe oil prices can come back off a bit if things settle down. So it is definitely getting up into that area where you're getting concerned that it may not be able to carry on with it. But yeah, at the moment, you're allowing that uptrend to continue. So Woodside, Beach, Santos, all of those really, really flying to the upside at the moment. Gold as well has been very strong. Again, I've been taking you through this, showing you the huge rally up to the all-time high and the correction. I've just been making all my calculations off that correction and just showing you how prices have been evolving. And you can see that gold prices have busted up through that point of control, which has been resistance for a long time. It's really struggled to get up through there. And once it did bust up through there, where did it go? Straight to the sell zone. That's where the resistance came in, around 1973. Just really confirming that what I'm looking at probably is the right range to be making calculations off. But the weekly trend's strong, holding up above that point of control. As long as we hold up above that 1880 region, I think gold looking more pretty much constructive for more upside. But again, you got to be wary, because it's all based on these geopolitical issues. If they get sorted, all of a sudden these big sharp moves can be reversed. So it definitely is a tricky situation. And I think inexperienced traders probably should be sitting this one out because it can get so wild and woolly. But really, I think gold prices should be heading higher anyway. So inflation still is not really under control. I'm not sure they will chase inflation down quick enough. And that would be a good situation for gold, with negative rates really continuing on for quite a while. So yeah, everything looking pretty good there, but the gold stock's not really picking up. That's been the frustrating thing. Oil prices, gold prices, flying, absolutely flying, but the stock's not really following suit. So there's not a lot of risk taking really going on. I think people maybe are a bit wary of the geopolitical situation, and they aren't willing to dive in and start buying these stocks because of the risk that things will be reversed in the next week. But that is an interesting situation right now, that the gold and oil stocks aren't really following along in the back of on the back of the rise in the actual markets themselves. So maybe that will end up being an opportunity if these rises in those markets can be sustained. So that's definitely something to watch. But uranium was the one that caused problems. And this is a chart of Paladin, PDN, one of the uranium stocks that can be brought back online pretty cheaply and pretty quickly, and with good production. So they have been flying. They are part of the Pivot Trader portfolio, one of the services I run. But we bought that back at 12 cents a long time ago. But just want you to note that the Russians were bombing near this nuclear power plant. Has caused a big sell-off in Paladin and the other uranium stocks as well. And I think that could actually end up being a bit of an opportunity. I think that'll be a short-term thing. And with the Russians sending so much gas to Europe, and this problem making the Europeans think about, and especially the Germans, about how much Russian gas they want to be buying, people may switch back to uranium as an idea. And Germany the other day coming out and saying they're going to hold on to their nuclear power plants a bit longer, which is quite big news. So I think uranium still is the place to be looking for an opportunity. So I think this current sell-off probably is going to be a good buying opportunity. And actually, people are coming in and buying it this afternoon with the price of Paladin back to 72 cents after getting hammered down to 63 cents during this sell-off over the last few hours. So I think there are a few people out there with the same idea as me, thinking it's getting a bit overdone. But that's one idea for you on the back of this crazy news that's going on. I think the uranium stocks are a good bet going forward, and this short-term fear could be creating a bit of a buying opportunity. All right, well, I think that's enough for this week. Crazy markets out there. Don't take too many wild risks because, as I said, things can reverse just as quickly as they went up in a market like this. So you do have to keep your wits about you. All right, well, I will come back with more next week. Cheers.